Oh, hello. So I am trying to go live in a different method. I hope it's working. I'm also using my new camera. And I don't have my light. I forgot to bring my ring light out here, but that's okay. You can see me. I think you can see me. It looks like you can see me. Yes, you can see me. Perfect. So I'm going to give some folk a few minutes to join us here in this world, my little Facebook world. I'm going to talk about homeowners insurance in Florida. And specifically, we've had some recent changes that I feel like no one's really talking about. So I'm going to kind of summarize what happened in June so that homeowners can understand a little bit more about the changes and what it means for each of us individually, because it does have an impact and no one's talking about it. So since I don't practice it that much anymore. Honestly, my practice has really shifted to being primarily real estate focused, and when I more generational wealth focused. And when I say that, I mean focusing a lot on estate planning, and probate is pretty much taking up most of my practice lately. And I'm fine. I love it. I enjoy it. But real estate has always been a part of my practice. I've been practicing law for 16 years now. It's been a minute. And I have been involved with real estate in some way for my entire practice. Um, I used to say when people would ask, hey, what area of law do you practice? And I would say bankruptcy or foreclosure. Well, there was a 10-year period where when someone would say, oh, I think you can help me. I need to speak with someone. I do need some assistance with an attorney. And I would always stop them and be like, look, I take houses. If my name is on a piece of paper coming to your house and you're having issues with, paying your mortgage, it's not a good day for you because it means I'm getting ready to start the process of taking your home from you. So, and that literally was what I did for 10 years. So I know the lender side of real estate very, very, very well. And before that, before the market crashed on us back in like 08, 09, I used to actually originate loans. I worked for a law firm that had one of their clients was a bank. I'm not going to say the name, but because of that bank, I actually handled, I was doing closings constantly, like maybe 3 a week, sometimes more than that. And I represented buyers. I represented the lender if it was a refinance transaction. I was a busy bee. I also represented sellers. I was super busy during the market, when things were insane the last time. And then it crashed. And then I had like no closings. And it was almost overnight, literally, where I remember the title company called me and they asked me, if our office might be able to hire some of their staff because they were going to have a layoff. And at that time, my firm was trying to figure out ways to sort of move the real estate, staff so that they wouldn't have to lay them off. They were trying to put them in different departments to help prevent having to lay them off. So yeah, my entire practice has always been real estate focused. And so I do stay on top of the real estate, whatever's going on. I'm also a realtor here in Florida, and I have a network of agents all over the country. So if you're buying and selling or leasing and you need a referral, feel free to reach out to me. If you have questions, feel free to reach out to me. The market is kind of crazy right now, and in some areas it's actually starting to level off just a bit, just a bit, just a bit. But like I said, what I wanted to talk about today are the recent changes that we've had to Florida law regarding homeowners insurance. And specifically, it was SB, so Senate Bill 76, went through. There was obviously a companion bill in the House. I don't remember the House number. It's not even relevant anymore because it did pass. The governor signed it into law on June 11th. And like I said, no one's really talking about it. And the reason why it came up on my mind is because I bought my house in Halloween of 2017. And so right now is when I usually get all of my renewal mail, just reminding me that my insurance coverage needs to be renewed because, it goes from October 31st this year to October 31st next year. So they give you enough time to make any changes, reach out to other carriers and possibly get quotes because you might want to switch out and go to a different carrier. honestly, every year I do take a look to see, if there's another carrier. And I mean, in all candor, they all suck. They're not great. The A part of the business model of insurance is to figure out ways to not have to pay claims. I don't care what they tell you, that's the reality of it. And so they're all crappy. One thing that I like to always remind people, and I always tell people, when you are shopping for insurance, okay, and you're comparing different quotes, please, 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 it's super important to match them up. Make sure that you're comparing coverage to coverage. So you want what you have now or better. And if you're going for less coverage, understand what that means in reality. But also super important is to know what your premiums are, because I see it's always disclosed. Your premium is always disclosed, as well as your deductible. A lot of people make their decision based solely off of the premium, which is what you pay each month, or it's actually annually. And then most people are going to have it escrowed and paid by the mortgage lender. So every month you give 1/12 to the mortgage lender and it goes into escrow, and then they cut the check at the annual renewal time, right? But a lot of people make the decision solely based off of premium. But even more important is your deductible, because your deductible is the amount that you're going to have to come out of pocket to fix whatever has been damaged. And I had a case, it was in federal court, and it was transferred to me. I was working at a firm where I used to sue insurance companies. And we sued, it's called first party property, and we sued insurance companies when they denied, delayed, or underpaid insurance claims related to property damage. And so a file was transferred to me because it was federal, and there were only four, I think 3 or 4 attorneys in the firm were licensed in the federal courts. And as a bankruptcy attorney, I'm licensed in all 3 federal courts down here in Florida, as well as the New Jersey federal court. So, yay, I got the case. And the first thing I try to do is get it sent back to state court, because honestly, nobody wants to deal with the federal court. It's a lot more time consuming and labor intensive, because in federal court, deadlines really matter. Whereas in Florida state court, it's a little wishy-washy. It's like the wild, wild west down here in state court, honestly. It's like the first thing I noticed when I started practicing down here. It's different. So I do all the litigation that's necessary to get the case transferred back to state court. And I'm having a conversation with the insurance carrier's attorney, and he says, by the way, have you looked at the deductible? Do you know what the deductible is on this? And that wasn't even my issue. I wasn't looking at the file for that. I was literally doing step 1, which is get it out of federal court, because you have a short time period to do it. So I was like, I'm looking through the file, and I can't find the declaration page anywhere. So I said to him, yeah, you know what? Can you please send it over to me? Send the deck page, because I need to take a look at it anyway. So I get it. The deductible on this loan was I think it was $46,000. Well, the cost to repair the roof was probably 50, because it was a duplex, and I actually had both claims, both properties. But my client had no idea, because people make their insurance decisions based off of the premium. They don't actually read the documents. I'm looking around because I just had my declaration for my flood insurance here, and I think I scanned it and shredded it, so I don't have it on top of my desk anymore. But, it gives you a breakdown. But the most important part of that breakdown is, what is your deductible? Guys, you need to know your deductible, because this is a real number. It's not real in that you need to pay it today. But if, heaven forbid, you ever have to file a claim, guess what? That deductible is going to come into play. So you need to know what your deductible is. Okay, so anywho, so I get my annual notification. Hey, it's almost that time. And I noticed at the bottom it says that we now offer the option to modify the roof coverage on your homeowner's policy, which can save you an average of 4%. Ooh, wow. This offer is only available at renewal time. If you don't have this coverage and you're interested, call your agent and ask them about the roof surfaces payment schedule endorsement to update your policy. Well, here's the thing. I know for a fact that your insurance carrier is never going to give you a discount just for fun. And I hadn't heard anything about this roof surfaces replacement payment schedule thing. So I did some digging, because I needed to know what in the world they were up to, right? And so I already knew that there was a change being proposed to the insurance law in Florida, but I honestly wasn't staying on top of it. I knew it passed as well, but I really didn't pay much attention to it. But because I did get this email, I decided to go and like really look at it, really look at the bill and see what happened to us, right? All right, so there are four, and I wrote them down, four key changes that happened, and it was passed, like I said, on June 11th. First thing is attorney's fees, because they're always trying to mess with attorney's fees and figure out ways to, pay us less. And just so you know, with a first party property file, so when we file those, our clients don't pay us up front. That's the structure for about 97% of the firms right now. We don't charge up front. It's very similar to personal injury where the attorneys don't charge up front. When the case gets settled, we actually also negotiate our fees with the insurance carrier. So unlike with personal injury where your attorney gets a set percentage of your settlement, that's not how it's done in this world. We actually say, okay, this is how much we want for the claim, and this is how much we want for attorney's fees. And then it comes up to what they refer to in the insurance company as a global number. So global meaning it includes both. Cool. So once it's settled, they will actually mail two checks to me. One that's made payable to me and one that's made payable to my client. And if they have a mortgage on the property, it's also going to have the lender as a loss payee, because obviously the insurance company has to be involved because they do insure the property. So the first thing they've done is they've messed with the attorney fee calculation. I'm not going to get into the details on how they've changed how our attorney's fees are calculated. Because at the end of the day, the only people impacted by that are the attorneys, and this is a video for non-attorneys. This is for the homeowners, so I'm not going to dig into the weeds about our compensation on that. Okay, so the second thing that they're doing, and this already applied to hail and windstorm events, but now they've expanded it so it covers all insurance, all property insurance claims. You now have to file, or at least notify the carrier within 2 years of the event, of the fact that you have this claim out there. And so this 2 years applies to both the initial claim and a supplemental claim. And if you've never filed a claim, the initial claim, you know what that is. That's, hey, our house was struck by lightning, or hey, hurricane such and such hit my house, and I'm gonna be filing a claim because there was damage. Fine, that's your initial claim. And then a supplemental claim comes where the carrier has adjusted that first claim and everything's fine. And then you realize, oh, wow, there was actually more damage that we didn't know about before. And this happens. It does happen. It doesn't mean there's fraud. It's just there's a lot of stuff you don't notice after a claim is adjusted. And so you file a supplemental claim. And so, like I said, this 2-year bar already applied to home and to hail and windstorm damage claims, but now they've applied it to all property insurance claims. There's this 2-year requirement. Number 3, there's also a 60-day notice of intent to file a lawsuit. This really impacts the attorneys more so because we used to only give 30 days notice. And honestly, it wasn't even notice that we were going to file a lawsuit. It was just a demand letter. We would send them a demand letter and itemize and attach whatever estimates we have that show how much the work is going to cost to replace whatever's been damaged. So now what they're saying is we have to also provide the carrier with 60 days notice that we intend to file a lawsuit. Kind of silly to me, but fine. The idea is that in this 60-day period, the carrier will actually look at the file and reach out to us and try to settle it before we file suit. And the reason being, once a lawsuit is filed, automatically fees are going to rack up because now the carrier has to pay their own attorney to defend them. And remember, if it gets settled or if we go all the way to trial and the case is adjudicated on behalf of the plaintiff, so the plaintiff is successful, the carrier is going to have to pay our attorney's fees. So they're literally dealing with increased fees from the second we file. And so this 60-day period really gives them another crack, another opportunity to settle the claim and reduce their liability as far as attorney's fees. I don't know if this is actually going to do anything. I don't know if they're going to miraculously start to resolve these cases before we file. But fine, they asked for it, they got it. Now, the most important part is going to be the roof surface reimbursement schedule. So, first and foremost, let me explain how it works generally. okay? So generally, you are entitled to a payout of the replacement cost. And the replacement cost, we're talking about roofs here. The replacement cost is how much would it cost to replace that roof that's currently on top of your house with similar material. And obviously, you're factoring it, you're doing the estimate based off of today's cost. You're not doing it based off the cost, how much it costs back in the day, because you're replacing it today, so you have to use today's cost. Now, here's what the problem is. The insurance companies have been trying to figure out ways to reduce and minimize their risk of exposure. We are in Florida, we are prone, we have an entire hurricane season. And as a result of that, we have increased claims. And the carriers were really hit because of Hurricane Irma claims. And they, in reality, were replacing roofs that honestly had well reached their end of life. And the homeowner was getting a brand new roof. So in reality, what was happening, not all the time, but in a lot of cases, you had people using insurance for maintenance rather than for what it's there for, which is replacing something that, was damaged. But when you look at the history of the home, like, it's a 30-year roof. You guys should have replaced this roof 5 years ago, but you didn't, and instead you're getting a brand new roof and the insurance company has to pay for it. And so naturally, that is something that has hit the insurance carriers really hard. And as a result, they are really going after homes. They're dropping coverage at renewal time and letting people know, hey, we're not going to renew your policy unless you put up a new roof on that house, because your roof has reached the end of life. I have 3 probate cases right now where that has happened, and 2 of those homes right now have no insurance on them because the family doesn't have the money, and they've decided, you know what, we want to go through the probate and then we want to actually just sell the house. We don't want to deal with this anymore. So literally have 2 houses uninsured, and we're going through probate. A whole other issue, but I can't force them to use the money that they, would come out of their pocket. There's right now no money in those probate estates, which is why they don't have it. That being said, what the carrier in this email was telling me is that I can opt for this endorsement. And an endorsement is basically an addition to your insurance coverage. Now, my home is not even 10 years old, so this endorsement doesn't apply to me. If I were to sign up for it, I guess it wouldn't actually kick in until year 10, because what it does is it applies to roofs that are 10 years old or older. And yes, you will get a reduced premium. Absolutely, you're going to get a reduced premium, but there's a caveat to that. So if you elect for this particular roof thing, 1, it might entice your carrier to insure you if you have an older roof, because it means that their risk is minimized. But 2, the other benefit for you is you're going to get a reduction in your premium. But here's why. Instead of you getting the replacement cost, if something happens, let's say a hurricane comes and blows your roof apart, right? If you had this endorsement on your policy, instead of getting that replacement value that I talked about, which is the cost to replace your roof with today's prices, and it's going to be the same or similar type of material, so your shingles, your tiles, your underlayment, it's going to be similar, right? Instead of that, what they're going to do is they're going to take the replacement value and they're going to subtract depreciation in order to come up with how much you're entitled to. So I actually drew out an example. I wrote out an example so that you can really see in real world numbers what this feels like, right? Hold on, where did I put it? Okay, so let's say you have a shingle roof and the replacement cost of your shingle roof is $15,000. But your roof is 12 years old. So when they apply the schedule, and there is an actual breakdown of the schedule and how they do it, but according to the schedule, your roof has depreciated by 48%, and that's 4% times 12 years is how they get the 48%. So that puts a potential payout of the claim at $7,800. And how they got to that is you take the $15,000 replacement cost minus $7,200 for depreciation, and you now are at $7,800. So let's rewind. If you have added this endorsement, yes, you're getting coverage because you may have been in a position where the carrier wasn't going to provide you with coverage because of the age of your roof. Yes, your premiums are lower, but Instead of getting $15,000 to replace your roof, you're only going to get $7,800. And that means you have to come out of pocket the balance. And also remember, you're going to have a deductible that's going to come into play as well here too. So factor that into how much you need to come out of pocket to fix your roof. So I think it's just super important that people understand what insurance, how insurance works and what happens if you select something. And always remember that if a carrier is just randomly sending you an email telling you, hey, we're going to hook you up with with a fat discount, it's probably a reason why. And so you should dig a little bit deeper or ask the real estate professionals in your circle, what does this actually mean? Now, I did mention that people are being dropped or being notified that their insurance is not going to be renewed if they don't get a new roof. And roofs are not cheap at all. And generally, you need to pay your roofer. You pay a portion before they start the work, and then sometimes it's 3 different payments. You do a portion after the permit is issued, and then you do the final. Now, you still may not have the money, even if you break it into 3 payments. You just may not have that kind of cash. And so here in Florida, we have something called the PACE program. The website is floridapace.gov if you want to learn a little bit more about it. But in short, and I have a video on YouTube about the PACE program. It's a really great program in that it allows you to take care of different repairs. You can even change your windows if you wanted to add hurricane-proof windows to your house or hurricane-proof doors, which does give you a discount on your insurance. But included in that would be if you wanted to replace your roof. And what happens is they don't do, you don't have to have a great credit score. And they don't want to refer to it as a loan because technically it's not. But the funds are going to be advanced on your behalf, and then you repay those funds using annual payments on your special assessment. And that's when you pay your annual tax bill. The special assessment will be included in there. And so if you don't have the cash in order to replace your roof or even do any of these other energy saving or damage minimizing upgrades to your home, I would definitely say look into PACE. With the PACE program, you would be working with certain companies that actually handle the funding because the government is not the ones cutting the checks. It's done by these third-party companies. And then you can only use contractors who have been vetted by the PACE program, which is another great thing because there are a lot of shady people out there doing shady things. I do know I have one roofer that I do recommend for PACE. They're phenomenal. They do East Coast and West Coast of Florida, which is also great. So if you do need a roof recommendation, reach out to me. I'd be happy to refer them to you. But yeah, look into PACE if you want to add any of this stuff. And guys, deductibles are super important, and now you understand what it's such a long name. Let me say the name right one last time. It's so ridiculous. Roof surfacing payment schedule. I just feel like they could have come up with something shorter, but it is a payment schedule, and they do reduce the payout, and it is based off of 2 things. It's based off of the type of materials used on your current roof as well as the age of your current roof. And using that, they go down the schedule to determine how much they're allowed to depreciate the value of your roof. And again, they deduct the depreciation from the replacement cost to determine what your payout would be. I'm kind of on the fence on how I feel about this change to the rules. I see it's kind of a balancing act. We all need to have insurance. We should have insurance. Oh, and that's another thing I should talk about too. But at the same time, we do need some oversight, and we do need some ways to limit how much the carriers are able to get out of paying us, honestly, because we pay them every month. We pay them every year. They get paid regularly, and they know the home they're insuring, but yet somehow they always come back and say, oh, well, it's actually old. You knew it was old because when we got the loan, we ended up getting the insurance at first, you looked up how old that roof was and everything else. So it's a game. It's annoying. The other thing I wanted to mention really quickly, it's 2 things actually, and it's about insurance. There is no law that requires you to have homeowners insurance. However, if you have a mortgage, then your mortgage lender is most likely going to require insurance. That's just a given. And then the other thing is flood insurance. Now, I think by now, between Hurricanes Katrina Hurricanes Sandy, and we just had Ida. That was, again, a reminder that you don't have to be in a flood zone in order to experience floods. And typical hurricane insurance does not cover flooding. Hurricane insurance does not cover water that comes up, and that's flooding. It's from the ground up. So even if you don't live in a floodplain or a flood zone, even if your lender does not require you to have flood insurance, I highly, highly, highly recommend that you still add it. Because here's the thing, if you're not in a floodplain, your insurance is not going to be as expensive. I don't live in a flood zone at all. So I'm not required by my lender to have flood insurance. But I have flood insurance to cover the entire home. If somehow, some way, the entire home is damaged by a flood, I'm fully covered. And I pay $572 a year for that full coverage. I think it's worth it because you keep seeing all of these people who didn't have flood insurance, and it's because, oh, well, I don't live in a flood zone. No, you don't. However, floods happen all the time in areas that don't exist, that are not in flood zones. And we're seeing it more and more frequently. I'd say we really first started seeing it during Hurricane Katrina. And if you look at Hurricane Sandy up north, they really were hit in areas that had never had floods. And now areas that are in these 200-year floodplains have now been hit twice within 10 years. So if this isn't cause to, get you out there to buy the flood insurance policy, I don't know what else is. But I think everyone should have flood coverage, period, point blank. And so that concludes my conversation with you guys about roof surfacing payment schedules here in Florida. It's an HO3 endorsement. And, do with it what you want, do with it what you will. I'm obviously not going to be signing up for it. No, you're going to replace my roof. It is what it is. You're going to replace my roof. I don't need your little 4% discount. I want my roof replaced. And so that's where I am right now on that. Maybe I'll change my mind once my roof is like 15, 20 years old. But for now, that's where we are. Have an awesome day, guys. And yeah, if you know anyone who is interested in buying, selling, or leasing real estate, please think of me as a referral. And yeah, have an awesome day.